All right, so another day for the stock market, and it's not looking so pretty right now, especially as a lot of these indexes are going red yet again after being in the green, nicely in the green, may I add, this morning. So we're going to break down the indexes, the charts, and a couple of companies that reported earnings this morning, guys, like Shopify and Disney. So hit the like button, make sure to subscribe, and feel free to sign up to my email list if you want me to send you my top 3 stocks for free every single Monday morning. That's the first link down below. All you guys have to do is put your first name and your email address, and boom, again, for free every Monday, I'll send you guys my top 3 stocks. And with that being said, cheers. Let's dive right into the video. So let me show you guys what's going on. We opened up at around $528 on SPY this morning, and we ran to about 531. So at one point, we were up well over 1%, I believe, right? Or actually 1.5% almost. Let me see. The closing price yesterday on SPY was at around 422. So at one point, yeah, we were up almost 2% this morning. Then we double topped, and since that point, we've been selling off. You guys can see on the intraday chart here on SPY, and the same thing on Triple Q, which right now, by the way, is only up 0.1%. Same with SPY, and the Dow's actually down 0.1% as the Russell's down almost 1%. You heard that right. So Triple Q at one point in the morning was up around, let's see here, guys, about 2.2%. Then we double topped at about 448, 449, and here we are under 440 as of right now, which is pretty nuts. And what does this tell us, guys? At least in my opinion, what do you guys think? It means that the selling might not be over yet. It might not be over yet. And I've been saying the last couple of videos here, I don't think the bulls are out of the woods quite yet. Anywhere near out of the woods, right? You guys can see this was just a relief rally, right? From 420 on Triple Q up to about 450. We got a nice $30 rally from the lows 2 days ago, Monday morning, to the highs this morning, which was around a 7% rally. That was a big move. And now it looks like we're getting rejected at the 180 moving average here on the 1 hour chart. The downtrend is continuing, it looks like. This could be a lower high being put in. Do you guys notice this right here? So it's not for sure going to dump off. I mean, I don't have a crystal ball. Nobody has a crystal ball, but it looks like kind of the writing's on the wall here, guys, for a potential dump off. Maybe back down to 430 on Triple Q, maybe lower than that. And the chart pretty much looks the same on SPY, which if I pull this back up on the 1 hour time frame, you guys can see clearly this could be a lower high being put in. We might be getting ready for a dump off back to the lower 500s, right? 505, 510, 515. So I'm not loving the way the charts are looking right now, guys. And like I said yesterday, right? I'll say it again. I said it earlier in this video. I don't think we're out of the woods yet. And don't get too excited. I said that yesterday. I'll say it again, as we're still seeing a death cross on the 4 hour chart on both SPY and Triple Q. And the VIX right now, funny enough, is still down, or it is down, but it's still up to the mid-high 20s as I'm making this video. And I think it's up a good chunk throughout the day. I mean, yeah, earlier we were at 21 on the VIX, right? Now we're at, 26 points on the VIX. So cheers to that, guys. Cheers to the fact that we might be getting lower prices and more buying could happen, which is good, man. We want lower prices, especially if we're long-term investors. So cheers to that. All right, so let me run through some earnings right now. We got Disney's earnings this morning. We got Shopify. Those are the two main ones that I want to focus on in this video. So this one, Disney, is not doing that well, down 3.5% post-earnings here, and it looks like the descending triangle that we outlined recently is playing out. We were making lower highs for months into the support of around 89, 90 bucks. Now we're dumping. We're pretty much in the mid 80s. So Disney ended up, I think they double beat, right? Yeah, adjusted EPS $1.39, which beat the $1.20 expected, and sales came in at $23.16 billion versus $23.11 billion expected. So double beat for Disney, and I believe their Disney Plus core subscribers grew 1% year over year. Hulu subscribers grew about 2% year over year. I'm not seeing it here, but this is from my memory. I read the earnings this morning, guys, and I think their all segment operating income jumped 19% year over year, so that's pretty good. But they are noticing a bit of a slowdown in the experiences segment, which is something worth monitoring over the next couple of quarters. Looks like we're getting a bit of a die down at the parks potentially. Nothing substantial, obviously, but a little bit of not even a disappointment, but a little bit less growth than expected there. But yeah, Disney's down 3%. It looks like we are still clearly in a downtrend. And with the move we saw a couple days ago down to 85.75, we actually hit a fresh low for the year. And here on the 4-hour chart, and maybe on the 1-year chart, no, the 1-year low is $78. We hit that back in October of 2023. Guys, who knows, man? At this rate, Disney could be going back to that spot. So, yeah, I mean, I like Disney as a longer-term play. I actually sold out of it in one of my accounts before the earnings, which, who knows, maybe I'll buy back in that account at some point in the future. But I sold out of it, put my money to work elsewhere in stocks, other stocks that I like more. I think I bought some Amazon. I bought some McDonald's. I bought some VTI, I believe, with the proceeds. But yeah, I'm still a Disney optimist long term, if you will. But short term, man, they got to figure it out, especially for the shareholders. The company is getting a bit better fundamentally, I think. Right, they're going in the right direction with their entertainment. The movies are getting better, which I think is. It's the top of the funnel. Obviously, that's very important. They're getting better, but still, man, the stock has just been garbage. It's down about 50, almost 40 bucks. Not 50 quite yet, but yeah, almost 40 bucks, 30% from the recent highs. They got to figure that out. But Shopify, on the flip side, is doing well, up 21% as I'm making this video, guys, and I'm not surprised. I mean, we talked about Shopify. It was way oversold heading into earnings, and they did pretty well. I believe they beat EPS and revenue. Yeah, 13 cents versus 12 cents expected. Sales, $2 billion. Actually, no, this is wrong. They definitely did not miss on sales. But I believe 2.05 versus 2.01. I was reading it earlier. So double beat on Shopify there. And their guidance, they see Q3 2024 revenue to grow at low to mid 20s percentage rate on a year-over-year basis. And analysts had them growing at 21%, I think. So that's going to be better than what the analysts were expecting. So boom, we're ripping up 20%. Now we're pretty much at a big resistance at about $65 to $68 per share, which that needs to break. Then from there, who knows? We could be making a move back to the top of the channel. Overall, I think there could be a lot more upside here on this particular stock, Shopify. So what do you guys think about Disney, Shopify, the entire stock market? I'm telling you guys, be careful. This could easily end up being, a bull trap. The little rally we've seen the last 2 days, we could easily start dumping down again. And the question is, are you ready for that? If not, get ready. It could happen. It's possible. So what do you think? Let me know in the comments. Run the likes up on this video. Let's get at least 100 likes. Make sure to subscribe. And you might as well get up to 20 free stocks from Moomoo with at least a $100 deposit. Use that link down below or go to stocksurfast.com/Moomoo. And for a limited time, your uninvested cash will earn up to 8.1% APY. So guys, this is a no-brainer. It's free money and it's also an affiliate link, so it helps out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you all in the next video.